You want some trading advice that actually works? Well, today I'm going to give you some trading advice that actually works. Some trading advice that I'd wished somebody had given me 33 years ago when I started trading. Some trading advice that will actually put you on the right track and tell you why you're losing in the trading game and why you need to follow a certain specific set of strategic plans to make a profit in the market. Because you all believe that the systems make you money, you all believe that the charts have got some predictive capability, and you all believe that a win rate is going to make you money. Guess what? I'm going to give you some advice today that's going to scare you. It's all wrong. It's all wrong. The whole thing is wrong. Today we're going to talk about what I do and see if it aligns with what you want to do and how you want to make your money. But hey, before we get there, let me introduce myself. I'm Rob, for those of you who don't know me. And for those of you who do know me, I am still Rob. It's Coffee with Rob. We're having some coffee. And then we're going to talk about the one little bit of trading advice that you need. And I don't give advice. I just tell you what I do. And I'll let you carry on with what you do. But I'm going to tell you this today. You know, so that you know what's going wrong. And you know how you can actually start making a profit in the markets. And I'm going to go through this strategically. You see, the one thing you have to understand, and this is the one thing I'm going to tell you today that's important, is that the charts do not have a predictive capability. The charts cannot, win rates cannot give you a profit at all. They never will. And you need a business plan. You need a strategy to make money in the markets. You see, you've been taught that a system, maybe it's MACD, maybe it's Ichimoku, I don't know, maybe it's a moving crossover system, or maybe you're just trading price action like we are and following the same old pattern. But at the end of the day, that's not going to make you money. And that's not what gives you the edge in the markets. So many people have told me that to make money in the market, you've got to have an edge. The only thing you can have is the edge. Yes, you do need an edge, but not on the charts. The edge is in your strategy. You see, the charts are only there to give you a high probability trade and the possibility of managing your risk and taking your strategy and putting it to work. If you don't have a business plan in the markets, if you don't have a strategy, if you don't have any idea what you're doing, you're not going to make money. So many guys out there, they go on a course, they spend so much money on that course, and then they go and they start trading, and they wonder why they're losing. They wonder what's going wrong, and they don't realize that there's something in their mind called fear. And fear is causing you to lose because you're not managing your business. You don't have a strategy. And if you don't have a business plan, the fear is going to kick in, and it's going to kick you at the end of the day. Now, the only way around this is to build a strategy that you understand that you're going to take losses. A strategy which gives you the understanding that you're going to lose half of your trades. Wow, you say, Rob, lose half my trades? Are you insane? Well, insanity is believing that you're going to win every trade. How can you possibly believe that you're going to come into the stock market, the Forex market, the crypto market, whichever market you're trading? They're all the same, by the way. You get into the market and you think, I'm going to get into the market and I'm going to beat everyone. Even though you've been told over and over again that 70% of traders lose money. You've been told this. You've been told that on day trading, 99% of traders lose money. And you somehow think that you're going to be part of the 1% that's going to win as a brand new trader. Up against pros, up against traders that have been there for 30 years, like myself, and up against other traders that have been there even for 10 years. And you come along, your first day, I'll sort this out, I'll take them on, that's no problem. I'm going to win all my trades. Because every trader believes that. Every trader believes that they're going to win every single trade, because otherwise you wouldn't be here, you wouldn't be trading. Nobody trades to lose. But that's the point. The point is You've got to learn to trade with the view that you're going to lose. You think, well, why would I do that? Why would I get into trading with a view, with a belief that I'm going to lose? Are you insane, Rob? No, I'm not. You see, you've got into trading with a belief that you're going to win every single trade. And the disappointment must be insane when you lose. You think, I wasn't expecting that. And then it gets worse and worse and worse, and you try it every possible way to save the trade. You dollar cost average, you move your stop loss out, you do everything that you're not supposed to do to stay in the game, and you end up losing even more than what you expected to in the first place. The point being, if you understand that you're going to lose half your trades, then suddenly you can structure a business plan around that whole policy. Now, I always use the analogy of if you were going to start a real business like a shop or a factory, surely you would have some kind of plan. You'd have a business plan. It doesn't have to be a 1,000-page document of anything, just something in your head. I know what I'm going to start. I know if I'm going to need equipment. I know if I'm going to need staff. I know where it's going to be. I know how much it's going to cost me. I know if I need money for it. And that's another thing. Do you have the capital to get into trading? Can you afford to get into trading? Do you have a way of getting into trading? Most people, if it's, let's say it's your hard-earned pension or your savings or something like that, or money that you've put together, or you've borrowed from the bank, which is probably one of the worst things to do. And you take all that money and you throw it at trading, and then you lose it because you don't know what you're doing, and you never expected to lose, but you do. What do you do next? What's plan B? Now, the point being, what you've got to do, I've learned to like prop firms. I've learned to like funded accounts these days, because in the old days, I thought they were a load of old rubbish and shouldn't touch them. But this year, I've kind of warmed up to them in the sense that I realized that a lot of people are going on courses and learning how to trade with the squiggly lines, and then coming back and putting their hard-earned cash in the market and losing it. Why are you losing it? Because you don't know what you're doing. You think you do, but you don't. Now, funded accounts, what they've done is they've allowed people the opportunity to put that in between them, their demo and their cash. So in other words, you've finished your course, you've learned how to trade. Now you're going to get a funded account, which only costs you a few $100. You start trading on that with a bit of responsibility. Your psychology starts to work with you because you've got something to gain or lose by this. And then if you do lose, you only lose a few $100. You don't lose all your money. And then when you find out that you've learned how to trade and you know how to trade well with the funded account, then you can move on to your cash and start playing around with that. That's what I think it's a good thing for, and that's what I think it's useful for. It also teaches you to manage your risk. It also helps give you some discipline. So I think it's a good thing nowadays. I think it's actually a great thing. Even if you don't make any profit out of it or any money out of it, it'll at least teach you the discipline, and it'll at least teach you how to trade. If you want something like that, by the way, I have left links in the description. So let's carry on talking about the losses and how you manage the fact that you're going to understand that you're going to make losses. Well, the simple trick is this, and that is if I was to toss a coin 10 times, in all probability, it'll land on heads 5 times. It'll land on tails 5 times. I always use this analogy. But if I told you I'll give you 2 for every heads, like 1 for every tails, there isn't a person on the planet that wouldn't take that, because if you took heads, then the advantage is yours. It's in all probability you're going to win. So why wouldn't you take that? It's insane not to. Same applies to trading. What you do is you understand that you're going to lose half your trades. So now the trick is to make more on the winning trades and lose less on the losing trades. And the only way to do that is to make sure that you have the same size account at all times, and to make sure that you take the same amount of loss on every single trade. It doesn't have to be exactly the same, but really close. So you take a percentage and you say, well, I'm going to risk, what I do is I risk 1%. I risk 1% of my account. You could risk 2%. You could risk 0.5%. Depends what you're comfortable with. But that kind of gets negated at the end of the day as long as you're making more on the wins. You won't always make more on the wins, because one of our policies, if you look on my other videos, is to follow your winners up to trail your winners up with a trailing stop sometimes, or to even add to them. And when it goes pear-shaped and turns against you, you might actually make a smaller win. You just have to ride with it and and add them up and let them lie in your system, because that's going to happen. But the main thing is you're targeting those big wins. You're targeting for the big win. Now you keep the loss the same on all your trades. How do you take a stop loss? How do you work this out? How do you make more on your wins? How do you keep the stop loss the same? Well, when you're looking at a trade, what you've got to do is look at the trade and say, this is the trade I want to take. Where do I want to put my stop loss? That's the first thing you do. Now, there's no such thing as tight stop loss, fast stop loss. Stop loss, there's only one type of stop loss. And that is, if I look at this trade, if I put my stop loss there, then this trade is completely negated. It's rubbish. I don't want this trade anymore. It's invalid. That's where you want your stop loss. Simple. You put your stop loss there. Now you work out how many lots, how many pips, whatever the case, back to your cost. How many can I buy? It might be 0.2, 0.1, whatever the case, it's 1% of your account. If it's a $25,000 account, it'll be $250. If it's a $100,000 account, it'll be $1,000. That's as simple as it gets. Now you've worked out your loss. You've worked out the size of your trade. Isn't it so easy from here? Now you just look and say, what's my risk to reward? Can I make a profit if I take this trade? Will I make more money? Will I make money if I take this trade? Because it's a form of insanity to be targeting a $50 profit, risking a $250 loss. You don't want to be doing that. You want to be targeting more than $250. Now, I don't say it has to be exactly 2 to 1 and you have to make $500. It doesn't work like that. You look at the trade for what it is and say, is it possible, if I look at this chart and I risk this, that I can actually make more than $250? Can I make $350, $400? That's fine. I'm making more than I'm losing. That's all I want. You look at the trade and say, well, that's quite possible. There's a decent target there, and there's the loss, and that all works fine for me. And then you take that trade and you manage that trade. When it goes into a profit, you move your stop loss up at the cost, so the trade's now costing you nothing. The one thing you have to understand when you take a trade, every time you take a trade, it's costing you that 1%, if it's 1% that you're risking. So in other words, in a $25,000 account, you're risking $250. Every single time you take a trade, it's costing you $250. Write it off. So that's it, $250 gone. But when the trade goes up into a nice profit, you take the stop loss, you take it up to break even, and now you've negated the loss. It is no more. Now you've got no loss. Now it's a free trade. Now you can tick that one off the box. It's not costing you money anymore. This is the point. Once you've understood that each and every trade is going to cost you that 1%, but when you can remove that 1%, it's not costing you anything anymore, then it suddenly feels much better. It's funny how traders are. If the trade goes into a loss and it starts going against you, then people will hold on to that trade for dear life. They'll hold on to it with their fingernails. They'll hold on to the edge like they're falling off the cliff. And the deeper it goes into loss, the more they'll consider dollar cost averaging and doubling up so that they can get back to cost. The more they'll consider moving their stop loss away, which was an invalidation area, by the way, so I don't see the point in that. And the more they'll get into trouble. And if it does somehow come back to cost and they get out of the trade, they go, phew, got out of that one. They don't say, oh, I made a profit. They say, I got out of that one, phew, break even. But if they go into a profit, firstly, they'll be too quick to click at $50 rather than wait for it to take the profit. But let's say they are patient enough to wait for it to go into a profit. It goes up and it goes up and it goes up and it goes into profit, goes into a decent profit. And they're happy it's got into this decent profit. They're like, wow, this is now profitable. Then they won't move the stop loss up to cost. And if they do, they move the stop loss up to cost. And let's say it comes back and it takes the stop loss out at cost. They make nothing. Then they'll say, I lost that $200 that I had. I lost it. Funny that, because when you were in a loss and it went back up to zero, you didn't say I made a $200 profit. You just said, phew, I got out. What you should be doing when that happens, when it comes back and it takes it out at cost, you should be going, phew, I didn't lose anything. And if it carries on and you move the stop loss up behind it and it keeps going into a profit, You should be excited that it's going into a profit, and you should keep adding, and you should keep moving your stop loss up behind it. It should be an exciting thing. You should be concentrating on the winners. Stop concentrating on the losers. If you see it losing and it's looking bad, get out, dump it, let it go. Small losses, out of the way. The smaller your losses and the more you negate your losses, the more profitable you're going to be in the markets. And that's just my little bit of advice to you, my little bit of information. I don't give advice. It's what I do. And I just wanted to see if it can align with what you do. But as I said in the title, this is the one time I want to give you some information that might work for you. Something that really works. Something decent. Stop worrying about the charts. The charts aren't going to make you money. The charts are going to give you the trades. You can't be without the charts. Nobody can be without the charts. I can't be without the charts. I need the charts to take the trade. Because taking a trade on little numbers running up and down is insane. Everybody needs a chart just to give yourself that feeling of comfort that you're taking a trade in the right direction. I mean, you don't need to. You can literally toss a coin and take a trade. But at least now you've got a chart and it looks like it's going in your direction. You can draw a line in the sand and you can manage the risk. And you can think for yourself, I feel comfortable that this is going to go up. And it makes you feel better when you take the trade. Because that's what it's about. That's what the charts are for. Because without the charts, it's rather uncomfortable just sort of going willy-nilly, I'm going long, I'm going short, whatever. You really do prefer to look at a chart and see which way the trade's going and give yourself that comfortable feeling that you've somehow got an edge, that you somehow feel stronger about the trade. But that besides, that's why you paid $5,000 for some course that taught you to trade on charts. That was the whole point in the first place. Guys, if you've watched this video all the way to this point without getting completely bored and sick and tired of my face and voice, at least give it a subscribe and stay with us. And don't forget, support the channel, join the members area. In the members area, I give a trade of the day every day, and I always answer your questions on time and all those sorts of things. Have a look. All the instructions and information is there. It's been great chatting to you guys. I've had a lot of fun. Don't forget to join us for the live shows on Tuesday and Thursday. Tuesdays are at 1100 GMT plus 2, and on Thursdays I put them at 1400 GMT plus 2. Why? Because different time zones, guys. This video goes out to the whole world, not just your country. Guys, thanks for watching. Don't forget to watch my last videos, which give you much more information on the systems and strategy as well. And I'll chat to you guys in the near future. Keep your feet on the ground, reach for the sky, and we'll chat soon. Thanks, cheers, ciao, and bye.